All right, imagine on January 1 of this year thinking where the markets would be on August 1st. And you would think, well, all right, where are we now? We're essentially unchanged. And you would think, well, a lot must really not have happened in the interim. Of course, we know a lot did happen. In fact, this week alone, we had a better than 300-point hit on concerns about Argentina, which we're going to be getting into, and other stuff. But those gyrations in between, they were pretty scary. But we're essentially back to where we were, back with our all-stars, Sabrina and Jonas and Lauren Jonas. Weird, right?
It's weird, except that the market was up so strong the last few years in anticipation of things getting better at a fairly rapid pace.
And price for perfection.
Right. That there was we would have had to have really, really strong economic numbers this year, even better than we saw, to continue the pace of the stock market increase that we saw in recent years. So it's going to peter out, turn down, flatten out without a much better period of news, and certainly not without debt crises and other things going on.
You know, Lauren, what made this whole jobs report interesting, we were talking about in the break, is that they didn't want it to be too strong because then, of course,
the markets would tank.
The markets would tank because all of a sudden interest rates would go up. Right. The Fed takes the money out soon. Right. Who knows? But we had a 209,000 payroll gain. The unemployment rate inching up a little bit to 6.2%. So everyone was breathing a sigh of relief. That's weird.
I think the data's not bad, not good, mediocre, kind of just like you said. The encouraging part would be the rise in the unemployment rate. About 300,000 people entered the workforce. They got more confident they could find a job. But when you look at the quality of the jobs being
that's what
created,
causes it. I know you're not saying you like the unemployment rate to go up, but that's what happens.
It went up for a positive reason.
Exactly.
But the quality of the jobs being created is concerning. They're not all full-time. They're not all high-earning. If you look at average hourly earnings, they went up a penny. I mean, really, what are you going to do with the penny? So,
but, you know, the market's like that aspect because, well, inflation maybe isn't such a worry, and we don't have to worry about the world ending.
Inflation's not a worry here in the U.S. right now. I know you can argue that.
Sabrina, what do you think of that? It's not a worry, and then we can all breathe a sigh of relief.
The numbers show it's not a worry.
I'm not sure that I agree. I mean, look, first, I like to be an optimist, Neil. You know that. I was actually happy to see that for the first time since 1997, we have created at least 200,000 jobs for 6 straight months. That's good news. The thing that I'm thinking of down here in Washington, there's all sorts of policies that are going to impact that. You just spoke about the impact that the NLRB is having on the franchise industry and what that will mean for jobs and the economy. I actually see that interest rates are considered low. Your interest is at 2.1%, but as you reported on this network, just this week, it's actually impacting people in terms of their groceries, in terms of their gas. There's a lot that's actually happening for individual wallets, and I think that that's going to feed into a downturn in the market.
Here's another issue that could feed into a downturn, or fears that it could if it mushrooms. Argentina, as you know, the country technically in default on making some payments, but according to Moody's, it is not alone. 11 other countries also on the brink of bankruptcy, and also facing the possibility that debt's exceeding whatever money they're taking in. Lauren, does that concern you? Another kind of contagion?
Yes, it does, because there's a bunch of countries across the entire world, and there's issues from inflation, huge, 40, 50% in countries like Venezuela and Argentina. There's political issues, there's corruption. These are countries that are having financial problems because of a host of different issues. And I looked at the list. Ecuador, you'll probably put it up momentarily. But there's other countries not on that list that I said, oh, I think they have a problem too, or they're not headed in the right direction.
I heard one weird defense of the United States of not being on this list technically because we can always print money to get out of it, which is not exactly a salient point. But go ahead, Jonas.
Ron Paul is coming back through to you for the interview. You know, that's a list of countries that look like they could default, so it hasn't really scared anybody. When you start to get into countries that aren't supposed to be defaulting, European countries, even Italy, that's when you have more of a crisis.
Well, you have to pick on my country.
But I will say that this used to cause problems when we had debt spirals with you remember the Asian financial crisis, 97, the Russian debt default, which they look like they could be next. Their ratings terrible.
We're with Argentina, go back to the late 70s and early 80s in the Latin.
And I think we're really ignoring, not just because, it's just Argentina, is because we're more focused on the Twitter earnings at this point, and it's a little bit like the late 90s where we just don't care about these emerging markets as much. They're not leading the market like they did in the run-up into 2007. Now it's led by technology here again, the NASDAQ. So I think that's wrong to not focus on these emerging markets, but the U.S. focus is where it is. These earnings still seem good. Job numbers good. I don't think it's really hit investors that hard yet.
You know, Sabrina, the argument we're not worrying about Argentina is that we're not nearly as exposed to Argentina as we were in the late 70s when they were going belly up, as well as much of Latin America. And it's the same reason why we blow off these Russian concerns for us, because we're not nearly as exposed, let's say, as Europe is. But I still like to think we're an interlocked and interlinked world. And that, you know, just like what happened with Greece and all the debt fiasco, what starts in an area spreads way beyond that area.
Yeah, and I actually find Argentina concerning because I think we think of Argentina as a wealthy nation, right? And so when you think about what's going on there and then you look at what's going on in our country, we think, wow, we spent $3.5 trillion last year. We have a national debt of almost $17 trillion. Are we taking away any kind of lessons here? You know, our debt has jumped 18 times since what it was under Clinton, 3 times since what it was under George W. Bush. You know, are we stepping back and saying, hey, that could be us one day if we don't start making some real hard choices.
You haven't heard we can keep printing money, don't we?
Right. Apparently I missed that.
It's ridiculous. Yeah. All right. Thank you guys very, very much. In the meantime,